Are we live? Yeah, I'm back again. So, I was on the phone with my friend. Are we live? Yeah. I was on the phone with my friend. I was telling him the story of my bad short and what lessons I learned from it, and I want to share it with you. Again, I already told you in the last live stream, but I want to do it again. So I'm in a big loss, minus 38%, because I opened a short. But let me show you real quick first the lessons that I've learned. So, okay, let me first go back and show you where I opened this stupid my stupid short, and what huge mistake I made. I did a very big mistake. Now I see it clearly, but I lost overview a couple of days ago and didn't pay attention to it. So, okay, let me first get back my drawings. Okay, wait a second. My computer is slow today. What's up? Where's my drawings? Ah, okay. Okay, here you have it. It's all messy, I know, but bear with me. So, on the 15 minute, I opened this short. We were right here. We just went down quite a lot. We were in this channel, but I know it's messy. It's super messy. So we went all the way down from 30. From 33,000, we dipped down. You remember, a couple of days ago, and then we went up a bit. And I thought that we will reverse, because on the 5-minute chart, I saw a trend line that was broken. So it's quite interesting. So here it is. Oh, it's so fucking slow. I hate it. So, okay. If you're still listening, nice. So we had this trend line. So first we dipped down majorly from 34,000 to we dipped down, then we went up again, and I thought we will be going down again. Why? Because first we had this this trend line, this fat pink trend line on a 5-minute. It broke down and we closed below it, and then we retested and went down again. So I opened the short right here. Later I added to the short, so it went up and the entry went up, but I opened the short here also because I saw divergence here on the RSI, because we created lower and lower lows, while on the price looked like it's creating higher highs. So to me it looked bearish. I thought we would go down, and so, and it's not a bad idea. It's not necessarily wrong. It's not the mistake. So I opened the short. It might very well dump, just like I thought. But the problem is, and my huge mistake was to not close the short after we broke a major 1 hour and 4 hour trend line. Because all these trend lines work and they might reverse, but if we, okay, let me explain a little bit different. So again, let me So I opened the short based on this trend line, and it's not necessarily wrong, but what was wrong is not to close the short after it didn't work out. So it went down and went up again. So here it might still have could reverse, but there is one reason why it most probably would not reverse anymore, and I should have seen it, and I didn't see it because I'm stupid, because I didn't pay attention to the king time frames. The king time frames are the daily and the 1 hour trend lines. So let me go back to 4 hour time frames, or at least 1 hour. So what happened is here. So this is where I opened this short. You can barely see it on the 4 hours. So this is where I opened the short and it went up. But there's one thing that I completely ignored, and it's this. I need to pay attention to the king trend lines, which are on the 4 hour, 1 hour, and on the daily. So this is the super king trend line. Let me make it real fat. If we break this to the upside, then it's quite bullish for some time. Of course, we might go up and dip, but for some time we will see some big movements, at least, and this is what we're seeing right now. So this is the super king trend line. That there's also a smaller king trend line. If we connect these two tops on the 4 hour, this top, this top, this top. So this is what I completely ignored, because I was just stupid or undisciplined, and it's a major mistake. Look, this trend line, let me change it to a little bit thinner. Actually, let me make this dark black. So so this trend line on the 4 hour chart was broken right here. Also on 1 hour. Let's change to 1 hour. It's actually better to see, or if this trend line is broken on the 1 hour chart, we have enough time to close this fucking stupid unnecessary short. So this is the king trend line on the 1 hour. 1, 2, 3, almost 4 touch points, and on the 5th one we break it. I'm in the short right here. If you remember, I'm in the short right here from beginning, from here somewhere. Then we close the hourly candle above this king trend line. Why in the world was I so stupid not to close my short? I had my stop loss somewhere. Let me put it. So my stop loss was somewhere here, I believe. Something like this was my stop loss, and I planned to take profit somewhere down here. So, but I removed the stop loss because I thought, oh, we will go back down again. I thought, well, we will go do like this. But it was a huge mistake, because I did not pay attention to this king trend line, which has been broken, like on the 1 hour chart. And later, I was still hoping, because we created, okay, let me remove this, because it's completely annoying with this appearance. Or maybe I can switch it off, because every time I hover over it, it's showing. I hate it. Can I remove it? Show price labels. Stability. No, I cannot remove it. Okay, anyways, let me delete it. Like this. Where was I? So, yeah. King trend lines. If they get broke on higher time frames. King trend lines are those on the higher time frames. We were still below it, below this king trend lines, where I opened the short, and it was actually perfectly fine. But it was not fine to not close the short as soon as we break above it, because then it's a sure sign. No, we're gonna go up, and this is a stupid thing I did, because also it's knowledge. I didn't know that it's that important. Of course, like logically, I knew that it's important, but you need to feel it. You need to go through it to really feel it and understand it. So yeah, that's the lesson. The lesson is this: I will have to change my trading algorithm, and it's like this. Let me even write it down here. So the first point is my strategy is trend lines. This is the this is my main strategy. I just draw the trend lines from, I connect the bottoms or the tops. For example, right here we can draw a trend line. Let's make it red. So this is my major strategy. What I'm seeing again and again and again is that you need nothing else. All you need is the logarithmic scale price chart and the trend lines. And you don't even need all this RSI, because what I have seen is all this RSI is complete bullshit. It didn't work. So many times we had divergence with the RSI, but the price still went on and on. So what I begin to see more and more is that basically, most probably, all you need is just the trend lines, and if you just look if they get broken. If they get broken, then you can open a trade. So this is the first step. Let me make it bigger. 24. Yes. First is to look for trend lines. So. So I was trying to change my algorithm of trading. So the algorithm is this: trend lines, then if broken, open order, or open a trade. Yeah, open trade. Short or long. All right. But super important thing is to first pay attention to the king trend lines. Let's say 4 hour plus 1 hour, and we have the queen trend line, one daily. Oh, it's a little bit messy. Okay, let me just change it to king trend lines. Like this. I always need to know where we are currently, based on the king trend line. So right now we broke above a trend line which went for how many days was it? 24 days. So it's almost a month. It's a huge trend line which went on for a fucking month. 24 days. So a 24 days long trend line gets broken. This is where we are right now. So right now we are slightly very bullish, I would say. Not completely, because we could fake out, but we are more bullish. So if we are, so the thing is this, I cannot just go and draw some trend lines on 15 minutes or 5 minutes and then just let it run. No, I need to know where we are. For example, if we are at somewhere here, somewhere here, I know we are close to this king trend line. I can open a short, yes, but my stop loss should definitely hit as soon as we close above this trend line. So my stop loss should be super tight right here, because after we close above it, it's over. The short might still be valid, but I will have to wait for a long time. I don't have so much time. I need to make money, baby. I cannot wait. So the conclusion is this. First, this trend line strategy works. So I see it again and again. It just works very nicely. But the the conclusion is this. I absolutely need the king trend lines, which go for a month, for example, or at least half a month, to be able to set proper stop losses. For example, let's talk about this trend line here. I was opening the short here. If I saw this this king trend line on 1 hour earlier, which is one week long, yeah, it's about 9 days. It's 9 days long trend line, this one. And if I'm opening a short right here, my stop loss should definitely be somewhere here above this trend line, because if we go above it, above this king trend line based on the past 10 days, then it's very likely that we will continue up and my short will just be run over. So the biggest mistake was in this case just to let it run and remove the stop loss and have some wishful thinking that, oh, we're gonna fake out. Why we fake out? I had no reason to believe that it would fake out very soon. Of course, at this time, this peak right here, this is because of this stupid conference with Jack Dorsey and Elon Musk and so on. This is why the price pumped. It started pumping here, and I thought, my thinking was, oh, it's not a big deal. It's just stupid news, and it will still fake out down. No, it's just wishful thinking. It doesn't make sense to think. How do you express it? To wish. To do this wishful thinking. It makes no sense, because the facts are king. These are the facts. The trend line. No emotions, just facts. It doesn't matter what kind of news pump us and make us break this trend line. It doesn't matter if it's weak news or if it's strong news, if it's Elon Musk who posted something, or if it's Jay-Z who farted and created an NFT out of it. It doesn't matter. If the trend line is broken, it's over. I would be much better off to open a long right here and get out of this fucking short. This is facts. Everything else is emotions. Also, another thing is let me get back on the moving averages. Earlier I said that I had no reason to believe that we would. Okay, let me remove all EMAs except of the 200. So okay. Also, I said I had no reason to believe that we would fake out. Actually, the reason why I still thought we would fake out is also because of the bearish divergence that I saw right here. There were a lot of bearish divergences. On the RSI, for example, let's connect this, and so the highs on the RSI are getting higher, but the highs on the price are going quite a bit lower. Also here and here they're going lower. So at this point I was still thinking we would reverse because we had this huge divergence. But as you can see, these divergences don't fucking work. It's just useless. It's bullshit. So I'm starting to believe that all these divergences, they are kind of useless in most cases. Because look, this is a strong divergence. Why didn't it bring us down? Another reason for me to believe that we would reverse from here was also this 200 moving average. I was looking at it and I was thinking, oh, okay, we will just bounce off, we'll be rejected, most likely. No, we didn't. And this is maybe one of the indicators that I still should use. So divergences, maybe I can throw them overboard, but the 200 moving average is quite good actually, because every time we dip below it, we continue to go down, and every time we go above it on 1 hour, we seem to continue to go higher and we bounce off of it. But I need to see that we close above it or below it. So this has some validity to me, the 200 moving average. But all this RSI divergence is bullshit. I'm starting to doubt it very much. Also, the market cipher or market liberator momentum waves. Let's take a look at them. So right here, we also had this divergence. So if we connect this this momentum waves, so the second momentum wave is higher, but the price is getting lower, or at least at the same. It's a little bit lower if we compare these 2 points. So according to the divergence, we should go down, but no. Also, of course, to be 100% in alignment with the divergences, we also should pay attention if we are above or below the 200 moving average. And at this moment, we were already above the 200 moving average. So the divergence is not expected to bring us down as much as it could if we were below the 200 moving average. But still, we also had this divergence. if you connect this line, so look, this is a lower high. It was a high here, okay, then it reversed, but right here it was kind of diverging while creating higher highs on the RSI, but lower highs here. So it didn't play out. Maybe I'm reading the RSI wrong, but I can't get my head around it. So let's analyze this as well. So look, at this point we also had this quite big divergence, like we're creating higher highs on the price on the 1 hour chart. So let me remove everything because it's getting very confusing. It's very confusing. Let me remove all this shit. All right. So. Okay, so right here we created higher highs on the price and lower lows on RSI. So I would expect it to go down, but it didn't. Okay, again, we might say we were about 200 moving average, so you don't expect it to go down significantly. Maybe you can expect it to go sideways. All right, okay, this is the mistake. Maybe this is the key. Maybe this is the puzzle that I'm missing with the divergences. Maybe it's yeah, maybe the divergences are still valid and they work, but only in the direction of the trend. So if we have a divergence that is against the trend right here is bullish because we are above the 200 moving average, then I cannot expect it to go down. This is maybe the key. Okay, I will not completely throw out the window the RSI. Okay, I will keep it. This is the decision. This is the little insight I have right now. So maybe I really should pay attention to the fact if we are above or below the the 200 EMA, and then see, and then decide from there. And but also okay, but on the other hand, for example, right now, let's just say we are again creating a divergence because we are creating lower highs on the RSI but higher highs on the price, and since we are above the 200 moving average, we should not expect it to go down, right? So instead of expect it to go down, what we can expect is going sideways, hit this trend line and go back up again, right? Right. But then we can ask ourselves the question, why do we need this fucking RSI at all if we cannot use it right now? If we just know it's gonna go sideways, we know it even without the RSI, that because we have this trend line right here on the 1 hour and also on the 4 hour, it's similar. We have this trend line. We just know that it most likely will touch this trend line, and then after it touches the trend line, it will either break it or bounce. Why do you need an RSI? At which point do you need the RSI? Okay, maybe if it goes down like this and the RSI goes higher, then we see, oh, we have a divergence again. or what else can happen? Let's say the RSI goes down like this. Okay, we confirmed the divergence, but we are above the 200 EMA, so we just expect it to go sideways or maybe break down. But what additional benefit do you get from this fucking RSI? What is the benefit? Okay, let me see. I'm shouting here. Maybe you have some comments. No. So yeah. Why do I need the RSI? What do I need the RSI for? Maybe we could say, okay, you want to estimate in what is the overall momentum, the overall strength of the markets. But do I need it? Do I really need it? I can go to the 4 hour, not 4 minutes, 4 hour. I can go to the fucking 4 hour, draw my king trend lines, which are these and this. What do I need the RSI for? I don't see it. And or for that matter, any indicator. If I get back on the market liberator or market cipher, oh, it's all smart, like, because it can show us the money flow is going back up again. The red money flow is going back up. Okay, very nice. But how do I use it? So, okay, we are most probably bullish right here, yeah, because the momentum is going up, the money flow is going up. Yeah, okay, beautiful. But I see it already with the trend lines. I see, first of all, I see that we broke, let's say the queen, not the king. We broke the queen trend line, which is which is a trend line that goes 10 days back. So if you have a trend right now, okay, let me define it. I'm creating a new definition. What are king trend lines and what are queen trend lines? Let me write it right here. Блять, сука, ёбаный. So, okay, we have king trend line, and queen trend line. So the queen trend line, I will say, is 10 days or 1 to 2 weeks. Let's say 1 to 7 to 14 days is the queen trend line. The king trend line, let's say about a month, 30 days. So, to show you what I mean, the example, let me diminish it. So, right now I just created a definition. What is the queen trend line? This is if you go back, if the trend line expands over, like, say 7 to 14 days. In this case, it's 10 days that it's expanding. Nice trend line. And the king trend line is if it goes for a month or like almost 30 days. Like here, 20 days, even longer if we count from here. 30, we go 30 days back, 25 days back, and we see a trend line that expands over the last 25 days, like this. Let's make it really thick. Like this. So this is the This is the the king trend line. This is the queen, like this one. Let me remove this. This is the queen trend line. It expands over 10 days, last 10 days. Black. And the king trend line expands over the last 30 days. Let me show it again. You see? 25 days, king trend line. 11 days back, or 10 days, whatever, queen trend line. So let's get back to the indicators. Okay, the market cipher or liberator, they are telling us that the momentum is going up and we are most likely more bullish, and the VWAP is going up, and the money flow is going up. Everything is curving up and is getting fine. But do I need it? Do I need all this information? I already have this fucking. First of all, the queen trend line got broken. That's first very bullish sign. So from here on, I almost can expect the price to go up. It's very high probability. Of course we can fake out, but I can use a stop loss that will take me out somewhere here, and it's good, or maybe here below this week. And then if we go back under this queen trend line, I know, okay, it was a fake out. Fuck it, let's go out. Finito, stop it. Out. No waiting, no wishful thinking, no emotions, no thinking like, oh, but the RSI or the divergence or the MACD is going up, or we gain momentum, we have a green dot, blah, blah, blah. It's all bullshit. I think it's all bullshit. I'm like a little, I have a little rant, like a little baby. I don't want to eat the onions. I know I sound a little bit like a spoiled little child who doesn't want to eat the onions. But come on, guys and girls and ladies and gentlemen, it's real. It's real. Look, I don't need the indicators. I see the trend line. The queen is broken. I don't need the RSI to tell me that we are above the 50 line. I don't need it. I don't need the money flow to curve back up and show me, oh, we're curving up, so maybe we're bullish. It's not an additional information. I don't fucking need it. I see the queen trend line has been broken, so I open it long. Punkt aus fertig, like we say it in German. And the aus Mickey Mouse, motherfucker. So this is it. If the queen trend line is broken, we open it long or a short. Basta. And what we also do is we set a stop loss, because in the case that we dip below, this queen trend line again, we know, okay, it was a fake out, there's no going up anymore. And in this case, we go out, we just close the trade, finito. But what we usually might expect after breaking this trend line is that we will go up and at least hit the next big major trend line, which is the king trend line. So we might take our first profits somewhere right here, maybe, because it's the first week. Maybe the next take profit somewhere around here, or at the trend line, at the touch, and let the rest run, maybe if we break it. But after we break this king trend line, okay, let's look again at the RSI and so on. Okay, on the RSI, we might see some divergence. For example, if we compare this high to this high, if we go down a bit, like this, for example, we might say, okay, we have a bearish divergence right here, like this, and we might go down again. But as we saw, the divergences can be completely ignored. And they're not sure. So we can completely ignore them as well. Okay, at this point we could also look at the indicators and say, oh, look, we are so bullish, we have the momentum rising here on the waves, and we are crossing, the money flow is crossing up. Oh, we are so bullish, we are getting so bullish, and maybe after we dip down again and then we create a new green dot right here, then we are bullish again if we do something like this. Oh, very nice. But is this actually helping? No, it's not helping, because if you're working with the trend lines, with the king and the queen trend lines, you would already be in this fucking trade. You would already, right here, you see the 1 hour closing above the king trend line. It's the king, baby. You open it right here and you let it run. How much percent would it be? From here to here. It's almost 2%. And at this point you might take your money or take partial money, set the stop loss somewhere here, and call it a day. Also, the question would be right here, where do you put your stop loss? So the stop loss, based on this king trend line, the very least, so the latest where we should go out of the trade is if we close below this king line, somewhere here. But maybe it's too much to ask, because it would be like 2.5%, I believe. Oh, it's 4% down. It would be 4% down. So maybe, oh no, sorry, we start from here. Okay, this is where we would open. So it would be like 2.3, 2.5% if we close below it. But one thing is sure, if you open a trade on the 1 hour or maybe a 30-minute after we break and close above this king trend line, it's quite probable, it's very likely that we will continue going up at least for a bit. And that means also that we can take a little bit of profits right here already. And if we don't want to risk any money right here, we could also move our stop loss into the profit. Like if we open the trade right here, let me remove everything else. So if we open the trade right here at this area after the close of 1 hour, we can also go and after we hit these levels, which is very likely after breaking the king line, we can just move our stop loss here and we will never lose money. It's very simple. And what are the chances that we go up and not down? They are very high. Even if we go down, then very often we will bounce. Because why? Because it's a king trend line, baby. They are very strong. And do you want to see some proof that they are very strong? Let's look for proof that these trend lines are super strong. I will show you something. It will blow your mind, baby. Okay, so let me remove all the drawings. This bullshit, this. Let me remove. And let's keep only this queen trend line and king trend line. So you want to prove that this king trend lines work. King is like 1 month and queen is half a month, for example. Okay, let's draw some trend lines. For example, some support lines from here, and I always use the closes, not the wicks. Maybe I should do it otherwise, but let me just go with that. Also, maybe I should use Heikinaichi candles because they are averaging everything out, but not sure. So let's draw some trend lines. This is, for example, a very bent trend line to draw right here because the touch point is very far apart. It's not strong because okay, it went down, but it went up again. Still, it was a lot. Actually, okay, let's say it's not necessarily a bad trend line, but maybe not as reliable. So it was like about 5%. If we just opened a short right here, we would first go up and lose our bowels because we would think, oh, we're going up, bad short, but no, we would have our 5% right here. But still, it's a little bit less reliable. So if you draw the trend line like this, where you connect this and also this, all these closes, so we have how many touch points? 1, 2, 3, and we break here and we close here. From here it's quite short. Look, it just waits straight down. It's about 7% or something. So was it a king line or a queen line? Let's see. I think it is a queen or little lady. Actually, it's not a queen. It's we should find another name. So queen is up to 1 to 2 weeks. King is 2 to 4 weeks, and below 1 week, what should we call it? What should we call it? What else is there? King, princess. Yeah, princess. This is a princess line. Yeah, baby. So a princess line goes about like 3 days to 1 week. Little princess here. Let's make it thin and pink because princes are sweet. Okay, another princess line. Can you spot some? I see some here. Yeah, this is a little tiny princess line, but as I told you, this is not as reliable. This is not as strong because we had only like 1 touch, and the second touch will break it. Here we had some touches, but not super strong. It's maybe like 4% move. So we close below it on the 4 hour, and then it's like 3%. So it's not super strong. You see, the smaller the trend line, the lower it goes. Right? Okay, but what we also could do, we could do it like this, redraw it. If we extend the trend line and draw it like this, now it's getting a little bit stronger, and it would be a queen trend line. So a queen trend line gets broken here. So at this point, if you would short it, you would maybe so okay, in this example, it would look like a fake out because first we retest it, then we retest it again before go all the way down. So at this point you might want to go out the trade, and you would lose some money, or you just wait because still it was broken, so maybe there's something more behind it. and as you can see, at the end it went down. So if you open the trade right here and wait long enough, like 2 or 3 days, it would still be 4% if you didn't go out of the trade. But of course, you might say from here to here we are inside the trend line. We are above the queen trend line, so we should close the short. And I think it would be wise, yeah, because you would not have to have this stress. So maybe that's a thing of preference. But still, if we waited long enough, maybe we draw the queen trend line, we would see that it still breaks. So as soon as it breaks, even if it fakes out first, it still goes down. And if you wait long enough, it goes down even longer. I'm quite sure it's not always the case, but you see it's even immediately reliable and you make a lot of money. Or you fake out and it fakes out and you take a loss, or you wait long enough and it still reverses, goes down. But there's let's actually back test what I said earlier. So if we were at this point, let me remove this and this and this and this. So we have the, let's say we are at this position right now. We see this M and we see it's breaking here on the based on 4 hour, and we think, okay, our queen line has been violated and we should open a short. Then we are right here. Then the price goes up again. What would be the king or queen trend line which might reject us? So we should go back and draw some other king or queen trend lines which we had before. So in this case, it would be this trend line. So let's make it black, because it's obviously like about a month long, 20 days. So it's 20 days trend line, and let's make it thick. And black. So this trend line, at this point where we open the short, at this point we would draw the line like this. So it would be something like this. So this would be our king resistance line. Actually, let me make it blue. Let me paint it blue. So this would be the king resistance line, and we could expand it so we can expect where it should bounce. So if we open the short right here and then we see the price go up again, what is the level where we definitely should go out of the trade? If it would close above this king trend line, but it didn't. Also, we see some confluence. If we see that our queen trend line is crossing with the king trend line, and this is exactly where it bounced. So it's a strong resistance right here. So if I opened this trade right here, if I opened the short right here, and I would see the price go up again, maybe I would not close it right after we just went above this queen trend line, because I see it created a lower high. This high is still lower than this, so maybe I would just wait first and see what happens. But if it would go up and close above the king trend line, which this is the major insight that I had today. We cannot just open a short and let it run, and if it retraces and just hope for the best. No, we need to know exactly what are the previous, what are the king trend lines. In a key trend line is, again, just like I said, you look back 30 days. So if you open the short right here, you look all the way back last 30 days or something, or 24, and you see, can I draw some trend lines here? And you see, okay, I very well, sir, I can draw a trend line here. Let me actually change the color because it doesn't look convincing. Let me change it to, okay, let's go with red, fuck it. Let's go with red and remove the 200 moving average. First, we don't even need the 200 moving average. So, because basically, if you turn it back on, it's very similar to this king trend line. Actually, you don't even need the 200 EMA. Come on, go online. So here, you see the 200 moving average. Yeah, we can use it, but we also can do without. So, so the insight today is the following. If we open, first of all, we look for the queen trend lines and maybe the princess trend lines. And if they get violated, if they get broken, we open the short or a long. And in this case, if as soon as we open a short or a long, what we do next is we look back, first we look back at least 30 days and see which trend lines we can make. And so, what are the king trend lines? Yes, sir, we can create this trend line. First touch point, second, 3, 4 touch points. So, at the point of opening the short, we already have this trend line. So we know where to put the stop loss at least. So if we go above this king line, trend line, we know it's over. If we go above it like this and close a daily or a 1 hour or 4 hour above it, it's over. So this is important. This is how you don't lose too much money. If you want to be even less risky, you can set the stop loss above the queen trend line. It's also possible. Here's the queen trend line, and not only this, not somewhere above the. You can go with the previous high. In this case, you could say, okay, I'm just looking for the previous high, and if we go above it, then I close. But it's too late, because at this point you already knew that you should close the short, because the price would be above the king trend line. So putting a stop loss right here is way too risky. Makes no sense, because as soon as we are above it right here, you know it's going up, and no. But what you could do is maybe set a stop loss somewhere above this queen line, maybe the high before, maybe somewhere here. This is possible. But maybe it makes more sense to look for the king trend line. I think this is the best stop loss, because there we have very high chance of probability that we reverse at the king line. But if we don't reverse at the king trend line, then forget it. So yeah, that's it. Let me recap real quick. The insight is this. Well, first of all, the way to trade is you look for queen trend lines and king trend lines. For example, you are right here. You look back 30 days. You connect the ups and the bottoms. Then you look for a break of any trend line, like right here. The queen trend line was broken right here, so you can open a short right here. Alright, so you opened a short right here. Then you need your stop loss, because without a stop loss, you will most probably not make good money. You will lose too much. So you need a stop loss. So you created a short right here. So to set the stop loss, you look for the king trend line, and you see, okay, if we go above it, somewhere right here, then we know for a fact that we need to close this trade, because it's going up, because it's above our king trend line. As soon as we are above it, we most likely go up, and the short should be closed. So immediately after opening this short, we set the stop loss above the previous wick, like right here, because at this point, or even lower, because look at this point in time, the king trend line is lower already, and we know if we close right here, then we should go out. But okay, let's be a little bit more risky, or more, let's say, let's risk more, because it might just wick up and go down. So okay, let's do it like this. Okay, let me do it again. So if you, how to trade, this is the insight. Once again, the insight is this. First, if you want to trade, then first you look 30 days back, and you draw trend lines. The queen trend line, which goes 10 days back, or up to 2 weeks back, and the king trend line, which goes 30 days back, or 20 days back. Okay, now you have it. Now, then you look for a break of these trend lines. Right here, the queen trend line was broken. We will go down, so we can open a short. And so you open a short right here at this point. Okay, now you need a stop loss, because otherwise you will lose money. So where do you put it? So basically you have two options. If you are very risk averse, then you could just put the stop loss above the queen trend line. But I think it is better to set the stop loss above the king trend line, and in this case it would be somewhere here, right above the last high swing of the king trend line. But as time progresses, you can lower it, you can improve your stop loss, because, for example, we go back, we go forward in time, and the price goes up, and it still may be rejected by the king line, but the king line is going lower. So you know, if we don't have to wait for the close at this point. We can also go out of the trade if the price closes here, or here, maybe a little bit lower, because the trend line is going down all the time. So you might lower your stop loss a little bit, just a little bit. As more the time progresses, you can lower it, because right here. And at this point, for example, if we are right here 2 days later, and you see the trend line is very much down, you know that if we close above it like this with a 4-hour candle, or at least like this, then you know that we will probably go up. So you don't need to wait for this stop loss. You can lower it a little bit, but of course lowering it might weak you out. It's a risk thing, but the possibility is there. Okay, of course it's up to a debate if you ever touch your stop loss, but it should be there. And where should it be? It should be at least right above the king trend line. So okay, then you wait, and then it makes money. Okay, let's now go and use all this knowledge. Right now I'm losing money, I know. Oh shit, I'm losing a lot of money. I'm minus 200 while I was talking. I'm minus 190. And I think it's another good example for the irrelevance of the divergence. Look, we see we created lower highs and higher highs on the price, but we still go up. And okay, the divergence may still play out. We can expand it. Maybe it still goes down. But let's switch to 1 hour. So, we are also above the 200 moving average. We have a divergence on the 15 minute, but not on the 1 hour, I believe. Oh, sure we do. Look, we might still have a divergence. So, on the 1 hour, we could connect these two, and it's slightly lower. We are diverging a bit because on the price the highs are rising, so we have a bearish divergence. But as I said, But as I said before, this divergence is less valid because we are above the 200 moving average, and this might be the key. So if we are above the moving average, the bearish divergence might be completely irrelevant. So I think most probably the only point in time where you can use bearish divergence is if we are below the 200 moving average. There's also a point where the bearish divergence will play out on the despite that we are above the 200 moving average, but I think we should be way above the 200 moving average. Let's see how far above we are right now. 645. So the bearish divergence, I think, will play out. So in a situation where we are above the 200 moving average and we have a bearish divergence, let's say on 1 hour, then there is one situation, I think, and one situation only, where the likelihood of the bearish divergence working is there. And this situation is if we have a king line. We are approaching any sort of super strong resistance king line. And okay, let me go to trading view. We have more overview on trading view. So okay, let's go to 1 hour. And again, I don't want to give up on RSI and divergences completely, because maybe there is time and situation, time and place to use it. So let's see. So right now we have this type of divergence. It's not completely confirmed, the divergence yet, but kind of looks like a divergence. So let's go with it. So let's say if we go down from here a little bit and we start to confirm this divergence, then I think we need to pay attention to the king and the queen trend lines to estimate if this divergence will play out or not. So okay, what are our king trend lines? Let's remove this because it was earlier, it was for the, now we have new king lines. So to paint the king lines, we go to 4 hour and let's just look back 30 days. Okay, 30 days back. It's 40, or even 40 days, 40, 30. Okay, let's go 40. Maybe we can also see some emperor trend lines if we go back like 2 months back, 74 days back. From here we could maybe even draw some emperor trend lines. Let's play with it real quick. No, we cannot really. Or if we draw the emperor trend line, we are massively bullish, because we had a touch point here, touch point here, touch point here. Even we could even lower it like this to be more valid. Based on the emperor trend line, we are about to reverse, because first touch point here, second touch point fake out, third touch point we went above the emperor trend line, we went down, retested it, and probably go up again. Yeah, I'm not so sure about it. Maybe if we do it like this. No, it's difficult to draw a trend line right from the all-time highs. Let's go with the kings, not the emperor. Let's go with the king, which is like 2 weeks to, let's say, maybe 6 weeks. Let's go with this one. How long is it? It's 39 days. Okay, let's go with it. And remember, our goal is to try to estimate if the bearish divergence will play out or not. So based on the king trend line, we are above it. So alright, okay. But can we draw some resistance line above it? Maybe if we go with this trend line. No, with this trend line. Yeah, there's one princess trend line we can draw maybe. Okay, 16 days is a queen trend line. Okay. If we draw these lines. Okay, this line also has been broken. We are above it. We are above the one of the queen lines also. So we have no resistance to expect here. It's only support. Okay, but let's keep it. Let's make it pink and keep it because it's the queen. Okay, what else? Maybe some princess line or name and another queen line. Okay, let's go. Try this. We connect this with weeks. No, doesn't work. We're above everything, so I don't see any resistance. So we cannot see any king or queen resistance lines right here. We have only support based on our based on our king and queen lines. We have only support. So the only resistance line which would help us confirm the bearish divergence might be a support line based on the daily or the 4-hour. So let's go to the daily and try to draw some support lines. Well, let's go with the obvious ones. This seems to be quite obvious, but it's way too it's not relevant for us. It's way up above. What we are looking for right now is a support or resistance line right around this area. So let's just draw a horizontal line right here. Let's look to the left if we can find some touch points. Okay, one touch point. No, not really, nothing really. So we have no resistance lines here. We have no big resistance lines or like no touch points here. So we cannot expect the price to go down. So we are pumping right now. So we are above the king trend line. The king trend line has been broken. This one, you see. So we are bullish. Now we have a little bearish divergence on the 15-minute and then the 1 hour. And we need to find out if it will work or not. But it will not. Definitely not, because if we go to 1 hour, it will not work. It should not work because we don't see any resistance right here on the daily. Maybe we find some on the 4 hour. Okay, let's see. Maybe we can find some in this area on the 4 hour, some resistance. No, the next resistance, all next resistance are higher. Somewhere like right here. Here. Quite a bit. Yeah, it's around 35,000, 34,900. Yeah, it looks to be like a valid support line, support and resistance. Yeah, exactly. You see, this is a quite strong support and resistance line. I will have to draw a lot of them later. I will have to take time, but first let's go with this one. This is what we need. So this would be the next resistance area if we would go up. And as you can see, this resistance area is way above our current divergence. If we go to so the 1 hour divergence if it would go down right now, we could not count on it. We could not count on this divergence because the next resistance line is this. This would be the support and resistance line. Let me actually change the color a little bit. Like this. So the next, if we would have some resistance right here, if we would have some strong resistance line right here, then this bearish divergence might be useful. But we don't see it, so we cannot use it. So it begs the question again for me, is there any case where we can use the bearish or bullish divergence? I don't think so. Maybe we can use the bullish divergence in a bull trend and bearish divergence in a bearish trend. This might be useful. So let's look. So we are on the 1 hour. Let's see if we can find some bullish divergences, because we are quite bullish. We are above the king trend line. We are above the queen trend line, and yeah, let's see. So we have only convergence here. These lows are just converging. Maybe 4 hour. Let's go to 4 hour. So this looks like a bottom, which is relevant for this. Lower bottom, lower low, lower low, lower low. No divergences here. We could also go to the daily and see if we can find divergences here. Lower low, and yeah, actually we had a nice divergence here. Really nice. Look, right here, from here to here. Let me paint it red, or maybe some other color. Green. Let's go with green. Light green. So we had. Did we have lower lows or higher lows? Okay, if we go all the way back, actually, you know what? We should switch to 2 daily. This would be more interesting. Now we can spot it much better. Look, if we connect this low with this low, this is a higher low on the RSI, but on the price we have a lower close low. If we go with the wicks are still just converging, but we go with the closes. We could go even further back, from here to here. We could also see, or even right here, it's a huge bullish divergence. Okay, let's not overstretch it. Actually, it doesn't work here because we dipped below this trend line here. We should really go with this one. So let's go with this one. It's a huge bullish divergence actually, but this bullish divergence, we had it, yes, but it was below. As you can see, we were below the 200 average. Let's switch back to 1 day daily. So okay, we had this bullish divergence on the daily. Let me recheck it. Actually, it was not really a divergence. It was almost diverging. from here to here. But if we compare with this, it looks more divergent. Okay, we wicked a little bit below it, we dipped below this, so technically we should go only with this lows, but it's still a lower low. So lower low, lower low, and we had a slight divergence here, which is slightly lower, right? No, wrong. The only divergence we can, the only clean divergence we can draw here is this. Is if we connect this, then we would have a higher low and lower low on the price. But we would also be way under the 200 moving average. And okay, let's say we would see this and say, okay, it looks like a divergence, because all the way here up we went up and up, higher lows, but here we have lower lows on the price. So let's say we would accept it as a divergence, but now we would also see that we are under the 200 EMA. And actually, is it the 200 or did I change it to something? Yes, it's to 200. So we are below the 200 EMA, and at this point, after we go up, we should be able to assess if we go up or down. So for this purpose, we would use our king trend lines, or emperor trend lines. And they would not work here. If anything that we connect above doesn't create enough resistance. So you see, it doesn't work. This would be our king trend line. And we would expect, after this divergence, we would expect to bounce here. The probability of a rejection here would be quite high. So if we opened a long right here, based on this bullish divergence, we would have to have our first taking profit right here. But the question is, could we really use this divergence to open a trade? This is the question. And this, in order to, oh, I was wrong, sorry. This is, okay, what I just told you is that we cannot use this king trend line because blah, blah, blah. It's bullshit, wrong. We should not, this is irrelevant for opening a long. For opening a long, what we want to answer the question, is this divergence valid or not? And to answer this question is we need to find out if we have some resistance or support at this area. So at this area. So what we should do is the following. We should place some line here and see if we have strong rejection probability here. So yes, we have a very strong rejection probability here, here a bit, here a bit, not touching but near it. Let's go look to the left. Yes, exactly, look, this is extreme strong support line. Bam, 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 bam. Let me draw it. Bam, bam, bam. Super strong support line. Bam, bam, right here. So if we are creating a divergence, bullish divergence, even though we are below the 200 moving average, we also see that we have a very strong support here. So if we create a divergence and at the same time see a strong rejection probability line here, then we can open the long even though we are below the 200 moving average. Also, we are very far away from this 200 EMA at this moment. Look, we are 22% away from the EMA, so the probability of a rejection is quite strong, because it's like a gum that you pull, and it's getting stronger. The pull is getting stronger and stronger and stronger, and boom, it shoots like the bow. How you call it? This rope of a bow. I don't know the name for it, but so we were very far away below the 200 moving average. We had a very bullish divergence if we connect this lows and this lows, and also we had some Superman strong support line at 29 or 30,000. So it was very likely that we would bounce. So what we should do, what I should have done at this point, I should have just seen this divergence. This is what I think I should have seen this support line, and I then should go to lower time frames like the 4-hour, and based on the 4-hour, after the bounce, I should have been opening a trade right here. So yeah, okay, this was a good example, I think, for a situation where the bullish divergence works, even though we are below the 200 moving average. So to recap, what are the criteria for a bullish divergence to play out? Ideally, we should be above the 200 moving average, but that's only the half truth. The full truth is what's important is if we are far away from it or not. So, or if we are close to it. If we are approaching it, okay, let's say if we are far away from it, then the probability that we will go back to it is a bit higher than if we are not so far away from it. So the criteria for the bullish divergence to play out, even though we are under 200 EMA, is this. First, we have a bullish divergence on the RSI and on the price, on the day, based on daily, not on the 4-hour. Second is we have a very strong rejection trend line here. And third, we should look for a confirmation of the bounce, which is like, for example, if we go to 6 or 4-hour time frame and then see some candle close above it, above this support line. And from here on, we're probably good to go, and it would be some nice 10%. Yeah, this is what I should have seen. But let's say I would open a trade right here, a long trade, not a short trade, because I was too stupid to open the short trade. I would open a long trade right here. Then where would I be looking for a short and for first profit taken? Oh, well, the profit taking, the first profit taken is obvious, is at least I should take for the first profits at this king trend line, because we go back 30 days, create this king trend line. This is a possible point of rejection. So maybe first half 50% of our position we could take out here. But what about the stop loss? If I would open the long right here, well, I think it's quite obvious. First of all, we go back and create a king support line. So it would be from here to here. Bear with me. Yeah, something like this. Let's make it blue. So the goal is to find out where we should place our stop loss. So this would be the trend line. It's not as clean, but if I include this candles, I just go with these two candles. For me it's enough. So it's perfect. You see, also this is also the place where we bounced. We bounced not only from the strong 30,000 support, but we bounced also from the king trend line. It's very nice to see actually this king trend support lines. They are strong. So this is the king trend support line. And why are we drawing it right now? Very simple. We want to know where to put our stop loss. So if we open the long here, then the stop loss should be right under it, maybe somewhere here, 29,000. But it would be a lot of money actually. Let's see. It's no, I don't like it actually. It's too low. I think placing the stop loss right here makes no sense because the king trend line is even lower than the support line, the major support. So I think it makes much more sense to put the stop loss below the support. So if we close right here somewhere, then we can go out of the trade, and we would lose like 4% actually. It's a lot to swallow actually. It's quite risky. But what can you do? We could go also with the previous low right here and put the stop loss at this wick. Also possible. But actually, the better way to trade it is maybe to go with 2 hour. So after we see the divergence, maybe we should go to 2 hour. It's the same, and open the long right here. Okay, let me ask this question. So on the higher time frames, on the 4 hour, it makes quite a bit of sense to open the long trend here because we are way below the 200 moving average, meaning we're probably gonna retest it again. Second, we have this strong support line here, and third, we have the bullish divergence. So it would make quite a bit of sense to open a long, at least here. But it's on the higher time frames, on 4 hours and so on. But let me just check how I would think if I were looking only on the 1 hour. So how my brain would work if I wouldn't have all this other information of the higher time frames. So what would be my thinking process? So at this point, what I would probably do, I would try to fuck with the trend lines here. With this trend line, yeah, probably I would want to wait for this queen trend line to break before I open a long. This is what I probably would be looking for. What else? I'm doing it because I want to understand myself, because I don't want to repeat my own mistakes. And question is right now, if I were on the 1 hour time frame at this point in time and I didn't see this bullish divergence, would I think bearish or bullish? So what trend lines could I have drawn back then? Okay. So I'm right here. Okay, what other trend lines? I would probably, yeah, this, I would probably draw this little trend line right here. Yeah, definitely. Oh yeah. Actually, this trend line would be solid. Oh my god. I think if I would see it back then, even without this bearish divergence, maybe. Let me see. So if I had this trend line on the 1 hour and it was 4 in the morning, I would be asleep. 6 in the morning. Let's say I woke up right here, 7 a.m. And probably would be too late to open a long. I would not think, oh, let's open a trade. Okay, at this point I would probably think it's too late because this trend line already has been broken and played out. So what I would be looking for at this point in time, without looking on the divergence, because I was stupid, I would be looking at this trend line. This would be, what would it be? Is it a princess? Yeah, it's a little princess trend line. Let me change the color to princess color. So yeah, this is what I would be looking for. This would be the best thing to do, I think. So we have this, and it goes even further back, I believe. If we connect the wick, maybe we can even connect this. Oh yeah, baby. Look, this is not a princess line. This is even much bigger. This is a beautiful queen line, probably. Yeah, 9 days. This is the same. We had it again, but so this is the nice queen line that I would see. Oh shit! That I would see waking up right here, and at 7 a.m. I would wake up. I would be able to draw this queen line. All right, I would see it right here. Great. It would be 8 in the morning. So what I would be doing is I would first do nothing and just observe. Specifically, I would be looking for a break of this queen line. If this queen line gets broken and we close above it, then it's game over. It should be a long right away. No fucking shorts. It would be too stupid. So first I would probably open a long, because queen line is super strong, as we can see. And also after, maybe before opening this trade right here, what I should have done, even without looking at all this this RSI bullshit, what I also should have done is, at this point before opening the trade, is to draw a king trend line. So I would go back 30 days from here. Let's see. This is 20. So 30 days is this span. And so the king line might be drawn from here. So, okay, let's try it. But maybe I should even go with 4 hour. King lines are probably better drawn from the 4 hour. So let's not lose the overview. So we are right here. We woke up, we saw it pumping. It's like 8 a.m. The price is somewhere here at this point. It's 8 a.m. We saw that the queen line was broken, so we are bullish. But before we open a long trade right here, we want to see maybe there's some important king lines to draw. So what we would do is go back 30 days on the 4-hour, like this, and we would see, so we have these tops here, and we would just connect them. Connect like this. Okay, first let me remove these lines so we don't get disturbed. Let's remove everything actually, so we aren't distracted. So again, we woke up at 7 a.m. We saw that that this queen trend line that we just drew has been broken, so we are potentially bullish. But before we open the long trade, we look for the king trend lines. King trend line is about 30 to 40 days back, maybe 2 to 6 weeks back. So we would see, right here we can draw a nice king trend line like this. So let's change the color as well to red. So what we would see at this point of time is that we can open a long very easily, and we would expect the price to maybe bounce. Yeah, it actually did bounce. It went all the way up and bounced. So we could open a trade right here and set two partial take profit areas. Maybe one would be right here at the first week up. The second take profit might be somewhere right here. The previous tops, it's actually 2 tops right here, and it would also coincide with this king trend line. So at this point we would also take partial profits and let the rest run, and we would know if this line is to be broken, then we can maybe even add to the long or just let it run. And the stop loss at this point, where would be the stop loss? Well, after everything that we were talking about today, the stop loss is super obvious. The stop loss, yes, right, is below this queen trend line, because if we go below the trend line and close a 4-hour or 1-hour candle below it, then this long would be invalidated. So we would open the long right here and put the stop loss somewhere below it, either right just below it, below the last candle like here, or if you can afford to lose more, you can use the previous week like this, but it would be a lot. It would be like 3%. Okay, not too much, but 3% loss. So I would probably put the stop loss right here, below the very previous week down. On 1 hour it would be more obvious. So right here, below this. So yeah, and going back to 4 hour, um, and at this point we could easily open the long and not worry too much about being under the 200 moving average, because we are very far away from the 200 EMA. If we are near the 200 EMA and they are below it, then chances are that we will go down more before we bounce. It's like a rubber that you pull on, and the more you pull, the harder it will be to pull. Like you pull right at this, like the price is the rubber, and this is the bow. The 200 EMA is the bow, and the more you pull in this direction, the harder it is to pull, and the stronger it will bounce. So the harder, as far as I understand, what I see, the farther away you go from the 200 EMA on the 4 hour, the quicker you bounce back, and the more likely is it that you will bounce back. You see, we went far away right here, jumped back up. Far away right here, jumped back up. Let's see. Let's look at the other times. Always jump back up, jump back up. And the same is true for the opposite. If we are above it, the higher above the 200 EMA we go, the higher the chances and the probability that we will just smash down, we just fall down. You see it again and again here. 13 March, 61,000. It's really far away from the 200 moving average. The rubber is pulled very hard, and the harder you pull, the less, the harder it gets, the harder it is to hold it. So it just bounces back. Basically, what I recognize right now, the 200 moving average is super helpful actually. So this is maybe one of the few indicators I don't want to live without, because to me it looks like the 200 moving average is the area where the price is just hugging, it's just dancing around all the time, like a snake. It goes to it and back, is to it and back. Then it's like, I don't know the right English word for it, but it's going around it, like trying to make spirals around this. The price tries to make spirals around the 200 EMA every time it on the and we are talking about the 4 hour. So every time it's near it, the probability is quite high that it goes will be rejected. But I think so. There are two ways to use the 200 EMA. One option would be, and this is what I've seen with other YouTubers, what they do is the following. They look at the 200 EMA, and if we are approaching the 200 EMA, they see it as a quite likely point of a bounce or a rejection. If we approach it from the downside, they very often say that we might bounce of it. Yeah, but I think even better way to use the 200 EMA is not to look for bounces, but instead what seems to work better is to look for the price to go far away, way far away from the 200 EMA, because the farther away it goes, the higher the chances that we will go down. So I think the perfect situation for a short is if we are high above the 200 EMA, we are far away. Like how much percent it is. Let's check how much it is percentage wise. 40%. Look, if we are 40% away from the moving 200 EMA, I think it's the best time to short, because all you need is to look for some trend lines, king or queen trend lines, to be broken. And of course we could use RSI and look for divergences, but I don't fuck with this shit. I see too little evidence for that. Maybe on higher time frames. It's complicated. Let's put it like this. I do see some value in the RSI, but it's easier to go with the trend lines first, and maybe to look at the RSI for confirmation or for confluence. So let's first go without the RSI. So let's say we only have, let me even switch it off, and the market liberator. Let's say, oh no, let's switch it back on, because it looks comfy. So again, my statement was this: if we are far away from the 200 moving average, like here, like we were in February, so the ideal situation for a short trade, I believe, is if we are, like I said, far away from the 200 moving average. At this point is 30 to 40% away from the moving average. Okay, and all we need right now for a short, we need to see some confirmation, and the best confirmation for a short is to draw king or queen lines. So let's say we are at this point right now, right here. So let me put it to the side. So let's say we are on the 4-hour time frame, and we are here. So we don't know what will be the future. We are right here at this point. I don't even know if you you probably cannot see it. Okay, then let me get it back. So again, probably the best point in time to short is if we are way above the 200 EMA. All we need to do is to look for confirmation with the trend lines. So let's say we are here, it's like at least 35% above the exponential moving average, and we look back 30 days to draw the queen and king trend lines. So how much is it? Okay, it's 40 days. Okay, it's enough. So let's draw some king trend lines. This is obvious. And since we are looking for short, we need to draw some support lines, of course. So a king support line right here. We could draw it on the 4-hour. So the confirmation for a short, according to the king line, not the queen. First, we need to do both. So the king line confirmation will be here. But for us, it's not good because we lose so much. We lose about 15%. So what we need is, okay, we have the king trend line, which goes back like 30 to 40 days. But we can also draw some queen trend lines. And for this, we could use these babies here, these puppies. And look, it's perfect. It's just awesome. Let me change the color to pink. So, actually, let me put some text right here, because you might just lose the overview, what I'm talking about. So let me use text right here. Okay, so we want to short. Remember, we want to short, and my hypothesis and my statement is this: that the best time to short is if we are on the 4-hour way above the 200 EMA, because the price after being so far away, it wants to go back and retest it and just go back home. So this is given. I will call it ideal short. So first we want to be way above the 200 EMA. Check. Done. All right. So the second, this second thing, what we do, we need some confirmation. So and for confirmation, we use the king and queen and king trend lines. Queen and king trend lines. Support trend lines. So the king trend line goes back 30 days or 40 days. The queen trend line goes back maybe 10 days or 2 weeks. In this case, it was exactly 2 weeks. So we created a trend line connecting the lows. This whole lows, it's an obvious trend line. So so we have the queen line. We have the 200 moving average, which is the price is way above the 200 EMA. We have the queen line, and the 200 EMA is waiting to be tested. So we look for this trend line, the queen trend line, to be broken, and we see it be broken right here. 4 hour close below this queen trend line. And what do we see? What do we see, baby? We see a strong move downwards and bounce of the 200 EMA. What else? What else is important? Of course, as soon as we open the trade right here, the long trade, we need to set a stop loss and plan where we will take profit. So the stop loss is obvious. It should be definitely somewhere above this king trend line that has been broken, the queen trend line that has been broken. So it would be quite logical to put the stop loss right above this. So if we, let's say, if we retrace and go back inside this and close right here, doesn't look good. So the stop loss should be at least right here, and if you are watching and monitoring it, you might even close it by hand right here, because it might be just a fake out. Or you can just wait and see for downwards movement. Maybe we create an M here like this and then go down, So okay, so again, we are way above the 200 EMA with the price. So we see, probably good time to short. Then what we do, we look back 30 to 40 days to create a king trend line, and we go back 10 to 2 weeks, maybe 3 weeks, to create a nice queen trend line. We just connect the bottoms here. And then we look for the break of the queen trend line, and it's been broken right here. So we opened a long, and of course we need a stop loss. We put the stop loss right above here, which is at least above this queen trend line, but also above the previous high. Okay, what about the take profit? So the first take profit should be probably somewhere at the king trend line. We can, and it's in nice confluence with the first low, previous low. So it's exactly at the previous low. It's like magic, you see. So usually a lot of people would take first profits at this area, because this is the first previous low. And yeah, we could take out like 50% right here and let the rest run, and then just observe if we break the king line as well. Because at this point we might reverse. We actually did reverse. We went below it, but we didn't close below it on the 4 hour. We went above it again and closed above the king line. So you probably should have taken all money out, or at least 50%, and then just wait. And then we see it got rejected by this new little support line that we could, neckline of the W. So if you draw it like this, it's actually a W. It's an M, sorry, it's a double top. So with the neckline right here, where we also happened to open our short, and the price was rejected exactly at the neckline, and it did manage to go below the king trend line, king trend support line. And after we broke this as well and closed below this king trend support line, I think it's game over, because look, it's insanely strong trend line, and if this shit breaks, we can expect more downwards movement. So we had we closed our position partially, so we have something still running right here, and at this point we could just add to it and let it run. And at this point, after breaking this king trend line and adding to the position, we also have to ask ourselves, what about the next profit taking? Where are we going out of the trade? And maybe can we do something with our stop loss? And yes, what we do is we, of course, after breaking this king trend line, it makes no sense to keep the stop loss right here, because we can lower it until here, or maybe even right here. Yeah, it should be going at least right above the neckline. Yeah, you see? So it's nice. So actually we cannot lose money anymore. We can add to the trade a little bit, like half or double, and maybe even increase the leverage and lower the stop loss right here and let it run. So the stop loss is done. Okay, we cannot lose money anymore. But what's about taking profit? And this is where we again have to look at the 200 EMA. As you can see, if we go far away from the 200 EMA and then we short it and we go down, the probability that we bounce from the 200 EMA after being far away is quite high, because in order for the price to go below the 200 EMA at this point is very low, because the bears were working all the way from here to okay. The bears were working all the way from this area up until this. You know, they were working a lot, pushing the price down. So they are quite exhausted right now. But the bulls are getting stronger at the same time. So in order for the price to break below so much work, even lower, it would take insane strength of the bears, which they probably don't have anymore. So at this point, I think it would be wise to look for taking out the position completely, take all profits somewhere right around here. So for the last profit taking, we again look at the 200 EMA, but maybe even earlier. But where earlier? Very simple. We look to the left and we see the previous lows. These lows seem to be very important. Look, 1, 2, 3, 4, 5, and here this area looks very strong. Let's even put it. So this area looks very strong. So I think the profit taking should be at least at this point. Maybe not everything, but at least a lot of it. So because chances are we just bounce and continue upwards again. So we didn't even reach the 200 EMA right here. We just bounced. But after creating a lower high at this point, we probably could also look for shorts again, because we are again above the 200 EMA quite significantly. We could begin to draw some new queen and king trend lines. So okay, this is basically the perfect short. The perfect short is first be way above the 200 EMA on the 4 hour, or probably on any time frame. Then we see some trend lines. We have a queen trend line and a king trend line. And as soon as we see the queen trend line being broken, we can open a short right here. And we look to take profits at the touch point of the king, or maybe a little bit earlier. And if the king breaks, then we add the position, lower the stop loss, and yeah, and then take profit at the next resistance point, which is this, in this case, about 36,000 it was back then. So okay, confirmation. Okay, let me. So the perfect short, way above 200 EMA. This is step number 1. Okay, we are. Second step is draw queen and king support and trend lines. All right. Next step, look for the break of the queen line. Okay, as soon as it was broken, fourth, after 4 hour close, or maybe 1 hour if you are risky, 1 or 4 hour close below the queen, open a short. Step number 5. Look, set stop loss at above queen at previous high. 6. Set partial profit taking orders at previous lows, which would be at least at touching the king line. At least at touching the king line. So that's it. I think it's the perfect short, without using any indicators besides of the 200 moving average. So I think it's very beneficial to not use anything else, not even use RSI. Okay, we could look at the RSI, see if we have confirmation, but do you really need it? Come on, we already see everything with the trend lines. King, queen, trend line broken. What else do you need? So so this is the perfect short. And let's, before I close this live stream, let's talk very shortly about what we might do next at this point. So at this point, it would be the perfect short. We are way above the 200 moving exponential moving average. We looked back 2 weeks ago, 14 days, and drew this queen line, and the queen line was broken, queen support line, and we opened a short, took first profits at the touch of the king. Then we looked to go completely out of the trade at the strong resistance line 46,000. And yeah, what now? At this point, what we could do is draw new trend lines. Maybe look for a bounce for a long, because after the thing is this, after we look, just if we have the situation where we were far away from the 200 EMA, that means that the probability of the price retracing back to 200 EMA was quite high, because the farther away you go from the 200 EMA, the higher the chance that it will touch it again on the 4 hours. So we did touch it again, but this going down, this movement costs bears a lot of power, so they lose their power. So now the bulls can take over. So the probability of the price going even lower than this and go significantly lower is much lower. The probability is much lower than of a bounce. Of course, if we touch the 200 EMA many times like this, and we continue to touch it right here, then probably we would go low. But most probably not immediately. So chances are quite good that we probably will bounce. So I think at this point, after closing the short right here and going back up again, we could either look for new shorts at this point, or we just draw new, or we just don't try to guess, but instead we draw trend lines. So we could draw this trend line, which is a valid resistance line, and it would be a, let's see if it's a queen, king, or princess line. So you see it's about 7 days, so it's a little princess line, because the queen is going longer, like 2 weeks. So this is 1 week. It's a little princess line. Let me make the princess a little bit thinner. She's young and sweet. So this is the princess trend line. And what we could do is just look for a break of this trend line on the 4 hour. Because right now we have 2 reasons to believe that it will go higher after the break. First of all these trend lines, princess, queen, and king trend lines, they are super strong. So every time they get broken, you can expect some movement. I actually need to find a situation where it did not happen. In most of cases, I see some upward movement. So what does it mean? It means that after our successful short, we look back what trend lines we can draw, and we saw this princess trend line. Okay, now we are waiting for the break, and at this point we have broken it. But right at this point, it's maybe too early to open the long, because we are exactly at the action area, because previously it acted as support, but since we dipped below it, it now might be a strong resistance level. So first we want to see breaking above it as well. And it would also be a nice beautiful W if you connect this, actually it's higher. It's from here to no, wait a second, again from here. So it would go from here to here to here and to here. It would be a nice W. So if you are very risky, you could open the trade exactly at this point, because we broke the princess trend line right here, and it's quite sure actually, even though we have resistance line. Or you could wait until close, maybe hourly close. It doesn't have to be 4-hour close, maybe an hourly close above this gray resistance line, and then you just open a long and wait for it to make money. So, and again, if we, let's say if we are very risky and open the trade right here, then our stop loss is right here. First of all, it's below the princess line, or maybe even here. It's up to you. I think right here, if we close below the 200 EMA, and we are also below the princess line, I think right here it's confirmed that it was a fake out, and I would go out of the trade. But let's say if you are want to lose more, you could put the stop loss here. So these are the 2 points where we could put the stop loss, and the profit taking would be obviously at our previous highs and lines. So this line looks like quite important. 1, 2, 3 touch lines, you see, a lot of touch points. So this is the area where we could take partial profits out, and then the next profit taking would be here maybe, and yeah, so we could do it. And at this point, after breaking this princess line, what else can we draw? Can we draw some king lines? Not yet, because it's all new. King resistance lines. So if we, but still we should look back. So after opening every single trade, we should immediately after it or before it go and look like 30 days back and see what we can draw. And let's see what let's say we would open a long right here, what we should do next. Of course, set the stop loss and the first partial profits, but we also look back and try to draw some lines. So first of all, we could draw this line. It's very obvious. We connect this and maybe even this. We can expand it to here. So this is some obvious trend lines. So this would be a king trend line, king support line. Okay, at this point. What else? That's pretty much it. We have only, at this point we would have only these 2 lines, the princess line, the king line. Then we would have the support right here. Yeah, and that's it. Okay, we could go on and on and on and on, but I also need my coffee. I didn't even have my coffee yet, and I'm wondering how much money I lost already, because I'm still in this stupid short, because I did not use any of the information and all the insight that I just presented to you. I didn't use any of that, but now I'm smarter. Actually, let's do, before I close, let's do one last thing. Let's take a look at my short. Okay, minus $180. Okay, let me analyze the current situation with the same tools. So what do? First, we go back 30 days on the 4-hour. 40 days. Okay, so we can draw some trend line. So this is the king trend line. It's about 25 days, I believe. We drew it already. Yeah, it's about 25 days. It's a nice king trend line. All right, we broke above it, so we are super bullish actually. So we broke above it, and we also touched the 200 EMA. And here, as you can see, we were far away below the EMA, and we also were exactly at this support line. So it was very probable, it was very likely that we would shoot up, and we did. So right now we are kissing the 200 EMA on the 4 hour. We are above the king line. So let's analyze it from this perspective. On one hand, the bulls lost a little bit of steam because they had to pump this price all the way up until the 200 EMA. So they lost some steam. And usually, very often what we see, as soon as we touch the 200 EMA, after this we bounce, we get rejected. So, because the bulls already had to put in so much power, they have less power now. So a super quick jump like in this manner is probably not that likely. And the chance of us reversing is quite high actually, even though we broke this trend line. Question is, what is stronger, the break of the king trend line, so we can go up and up and up and reach this line, and then go down, or something else? I think we could look at history. Let's look back at the situation we just had right here. So right here we had the break of the king trend line, the red one, and we went down, and we reached the 200 EMA. And after reaching the 200 EMA, we retraced a couple of times and bounced back, and we didn't go further actually. So let me remove this. So this was the king trend line. It worked out perfectly. We went down. How much was it actually? Let me see. So 13%, perfect. And after doing this, after touching the 200 EMA, we just went back up again. And at the same time we created this new queen line, which has been broken. So for a proper bounce, we probably need a new trend line, at least a princess trend line, and bounce of the 200 EMA. So let's see if we can find some queen trend line at this very moment that can be broken. And very well, I think we can expect some right here. This is a super tiny, I think this is a super tiny princess trend line. Remember, princess is about 3 to 7 days, maybe 2 to 7 days. Queen line is what was it? 2 weeks, let's say 1 to 2 weeks, and so on. So this is, let's see how many days it is. It's 4 days. Yeah, it's a nice princess trend line, that's trend support line, which is being created right now. And of course, right now we are asking ourselves, how much further will the price go up after breaking this king trend line and after touching this 200 EMA? So what we should definitely be looking for is the touch of this queen trend line. So what might happen is this. that we go down, then bounce back up, and then increasingly go back up in this manner. And after hitting this strong support line, which was support line, now it's a resistance line, and after being quite far away from the 200 EMA, if we break this trend line right here, we will go down and at least probably retest the king line. Oh. Right here. But until then, it's quite a lot. Let's say if we would go up from here, it would still be like about 4%. So, okay. Let's see how much percent we have. We have about 3% move already. Might go a little bit higher. So the difference between this situation and the previous situation that we were talking about is that the 200 EMA was reached very early. So we might bounce back, so it might be a fake out of the king line actually. Or maybe we drew the king line wrong. If we draw the king line from here, this might be actually more, this might make more sense and give us more money. Actually, this was the king line, not the other one, because let's say, okay, it's 40 or 70 days. It's 37 days, okay. Yes, I think this is the real king line. Yeah, I was wrong. The first one, this one, is too little, because we cannot just go and ignore this previous high. No, we can't. I think this is the proper king line. A new lesson learned. So next time I draw the king lines, I really need to pay attention to everything, to all the highs within the 40 days. Yeah, this makes much more sense. Look, this makes much more sense. So we have this king line, we have touch point here, almost a touch point here, and here we broke it. So after we broke it, we went down, and this is where we should be already be looking for the for a long. Actually, let me recheck, backtest if the previous king line wouldn't give us the same entry. No, you know, the previous king line, this one, would give us an entry slightly later, you know. We would first have to wait close above this line. But with the bigger king line, we could be opening the trade already right here. Because at this point we would have closed the 4 hour at a level way above, quite above, not way above, quite above the king trend line right here. This would be the proper place probably to open a long. Or of course sometimes you want to see the confirmation, so retest, and after we breach this, but it would be then the same as the previous king line. So I think the best way to open a long right here would be to go to maybe 2 hour or 1 hour. Let's see, to 1 hour, and look. So at this point of time, we would see that we are above, clearly above the king trend support line, right? So it was a resistance line, so we broke it. Now it's now it's a support line, and we are clearly above it right here. For example, we are on the 1 hour chart. What we could see, we could just look for a W for the entry. For example, this, or maybe, so either we open the trade right here immediately, or we look for a retest like here, and look for a W break right here. So this would be the neckline, this would be the W, and we would be just looking for the neckline to break. So the neckline would be somewhere here. So it would break, and after we close above the neckline right here, it's pretty much confirmed. At this point, it's pretty much confirmed, 33,000, that we can open a long. So yeah, but if you are very risky, you could open the long at 1 hour close, at the first 1 hour close above this king trend line, this huge trend line, and just set the stop loss somewhere below the previous lows, somewhere here maybe. So if you open the trade here, the previous low would be somewhere around here. So here would be the stop loss, which is quite a bit money to lose if it closes 2.5%. But on the other hand, we are breaking a major king trend line, so the probability that we go back up is quite high. So it would be 4%. Okay, the last question that I'm asking myself is just how much further up we can go. Will we bounce like this and then break down, or we will bounce and even break it? Probably we cannot know. We just have to wait. So this would be the one of the previous highs at this point. Well, let me change the color to this. So the price might jump to this area very well after this. The chances are quite high that the price will do it after it reaches the queen trend line, the princess trend line right here. Chances are actually quite high that it will go higher, because again, look, if we break this major big trend lines, very often we'll go back up. Okay, so my best prediction right now, what might happen is this: that we have an obvious princess trend line, which is about 4 days. So we have two facts to consider. Fact number one: we broke this huge king trend line on the 4-hour chart. We broke it, which is an indication of a strong move upwards. Second fact is that we are creating a new trend line, support line, which is a beautiful princess trend line. So now we take these two facts together, and what we can do right now is we can probably expect the price to retest the princess line again, then bounce up, go a little bit higher, then bounce up and go a little bit higher, at least up to this level, because it's the level of the previous high. So, and at this point it might even push even higher up until this support line, and then just to retrace and break somewhere here below. This is totally possible. On the biggest time, on a huge time scale, it would look like a fake out. But fake out or not, it would be nice. How much is it? 8%. Yeah, almost 7% from here, from the neckline, or 8% if you go from the, yeah, almost like 8% if you measure from the bounce. So it's a fake out, but a big fake out, which can make us a lot of money. And all the while we are if we will create this, if we are about to create this tests and touch points of the princess trend line, we can also form a rising wedge, which is very often bearish. So, and of course, as we are approaching this area right here, all we need to do is just to wait and see where it breaks. If it breaks somewhere right here, the support line and the upper side of the rising wedge, then of course we're going up. We can add to our long, open a long, whatever. But if we break right here, then we can open a short or close the longs. And another thing to pay attention is as well, super important, we should always, the more up we go, the more we should pay attention to the 200 EMA on the 4 hour. So, as you can see, let's say if we really go up and retest this princess trend line and go up and up here, by doing this we also are moving away from the 200 EMA. And the more we move away from it, the more tension we build, and the more probability actually for a retest we have. So this 200 moving average may probably go like this. Let me change to blue. May go something like this. And if the price then, if the price goes up like this, it's moving away from it, from the 200 EMA. So probably at some point we'll want to retest. Should we go above it? But we could not even go above it. So, okay. So this is the major overview of the current situation. And I made a huge mistake by opening a short right here. Okay, the mistake was not really to short. The mistake was to not go out of the trade as soon as we broke above this king trend line. This was the mistake. The short was quite okay. It might very well go down from here. So actually I opened the short right here at the queen trend line. Yeah. So yeah, a lot of mistakes. But now I am a little bit wiser. It's okay. So I'm getting quite tired and I need to get my breakfast. But before I do, I want to take a little look at the 15 minutes. First I want to take a look, and as you can see, look, you don't really need any indicators for this besides the 200 EMA. Do you really need all this momentum to show you that we are going up? We see it, come on. Why do you need the momentum to show you that we are going up? We see it already. And if we are going down, we see it also because we break one of the lines, for example. For example, if we go here, test this Princess trend line, support line, and we break it, we will, I guarantee we will just see a momentum wave curving down, and we will see a red dot right here. I know it. I just look at the chart and I will see. So okay, let me turn off the market liberator or market cipher. It's basically the same. So let's say the market cipher or market liberator, they are basically showing us one of the important things is that these red dots. So right here, for example. But we know it already. If we just went down, we will see a red dot. Look. You see a red dot. And it's showing it later. So, okay, let me switch it off again. Other point. Right here, it will show a green dot. I guarantee you, look. Right here. Not on the 4. Oh, okay, not on the 4, but on the... Okay, okay, David, you are full of shit because it didn't show. Okay, it's maybe too small, but on the obvious ones... Okay, I'm not looking down, I promise. I think right here we will see a green dot. No, we don't. Later we see the green dot. It's not even fast enough, you know. And yeah, it's actually a little bit different than I thought. I would expect that every time we go down we would see a green dot, but it's a little bit different. So it's showing the green dot later after we reverse. But anyway, for me, okay, I agree. I was a little bit wrong. Not every time we just go down we will see a green dot. It should be more than that. Maybe on 1 or 2 hours it's easier. But I still don't understand why we should need it. So to me it's more confusing and more distracting. And yeah. Some people say, you know, they love this big fat green dots on the market cipher B or market liberator B on this momentum waves. I don't want to hate. I just talking about what I was observing all the time and how it did not really benefit me. Maybe I was too stupid to benefit from it, but maybe it's just not really useful. So they all love the big fat green dot on the market cipher because if you see it you can long, and very often it will turn out well. But look at this. If you see something like this, it's obvious that it will go up because first we have this strong support right here. We are far away from the 200 EMA. And we have this huge ass wicks, you know, super long wicks, which are, oh wait, we have a super long wick. Of course we will have a big green dot. So yeah, I'm rethinking all this. Market cipher. Maybe when I find a way for Confluence I will use it, but as of now so okay, let me look. Or if we look for other green dots, like this green dot, for example, this big fat green. Why? This also the reason why I try to look less and less at these green dots and market cipher and so on, because this green dot, for example, where is it? It's right here. It was probably printed somewhere here. So what do you have if you trade with this? So you have like 1%, but then it reverses. And some green dots appear too late, or like this on the 4-hour close. Actually, right, okay, I agree. At this point it would be good. Okay, I agree. At this point the green dot was valid. So maybe I should rethink it. I had the impression that the green dots are way less reliable than you might think. This little green dots are, yeah, this green dot is basically just 1%. Okay, let's see. I'm open to new things. If I'm wrong, then I admit that I was wrong. So the basic strategy with the card strategy, the king, the queen, and the princess lines. Let's say we are somewhere in this area, and we try to look for market cipher or market liberator for confluence. We had a green dot right here. Let's just analyze each and every green dot that we had on the 4-hour. This green dot would be not really useful because we already pumped. Okay, it would be probably be printed too late. This green dot, okay, it's useful as a confluence, but we have a lot of other signs as well that we are going up. Okay, this green dot, this green dot. Okay, this green dot is completely useless because we just went down from there. This green dot gave us a couple of percent. This green dot was probably way too late. We would open the short somewhere in the middle, go back up, and then go down and lose money. Okay, 2 bad green dots. Another green dot completely useless because after this we went down. So 3 green dots that are useless. 3 green dots that are useful, 3 green dots that are useless. Okay, another green dot. After this, yeah, lost, because if you open right here, it would print probably close right here, and then you open the trade here. Maybe let me look at the green dots in a different way. Let's say that we open a short after the green dot. So after the close. So after the close, we open right here, boom, money. Okay, after this green dot, after the close, I don't even know why it's green, because we have a bearish candle. I don't understand it. Alright, anyways, we have a green dot. We open a long after this, we lose money. Okay, here we open the long right here, then it would be like 1%, and then rejection. Right here we open, we lose money. We open, lose money. Okay, we open the short, the long on the close, on this green dot, we lose money. We open right here, we make money. So it's all over the place actually, these green dots. Open, make money, open, make money, open, lose money, open, lose money. So probably the green dots work better if we are above a trend line, above a queen line, for example. Let's try this. Let's connect. So we connect this and this bottoms. So we went up. We are bullish. We go down. We go back up again. So probably in the area, so after the touching of the trend line, so from here to here, somewhere in this area, if we see a green dot right after touching the bouncing off the trend line, probably the green dots will be quite good. So let's see, let's go look down. So we have the touch here. Okay, we have a green dot, but we see also with our eyes that we are bouncing. So we bounced, we cannot use this green dot because we see the bounce with our eyes. So we bounced, and after this we see a green dot here. We cannot really use it because it would be actually a loss. If we open the trade right here, we went down. So okay, doesn't work that way. Probably we should use the Jason Kasper strategy. If he sees a green dot on the 4 hour, then he goes back to 24 minutes and looks for green dots there. So let's try it. Okay, let's say we are above this trend line somewhere here. We saw this green dot, this little green dot. Let's mark this. We saw this green dot on the 4 hour. Now we go to 24 minutes. We can go also on the 15 minute, doesn't matter. So let's find this place. So this is the timestamp of the 4 hour green dot on Market Cipher or Market Liberator. And after this we just look for trigger waves and green dots. Yeah, we could actually use this green dot to open a long. We could also look for confluence with the support and resistance line right here that we could draw before already. And after we see a bounce from here, we could open a long right here, for example, and go all the way up 3%. That might be a strategy. Also, we would be above the 200 EMA on the 24 minute. Yeah, quite nice. And after we see some downwards movement, we would probably close. Yeah. Alright, so the green dots might be possible. But does it always work? I'm not sure. Okay, let me, as you see, it's getting a little bit complicated like this. To me, it's a little bit distracting, even if it gives more confluence and more confirmation, it's a little bit distracting. So I think for the next time, what I will do, I will focus on my strategy with this king, queen, princess, and prince trend lines. And probably I will not even look at the RSI probably, or even maybe just a little bit, and So this will be the basis of my trading, and everything else, like the market cipher or the market liberator, will be probably just a confirmation, like confluence. Okay, very interesting. You see, we are going back down again. So, like I said, we'll probably retest this area and go something like this before we go down or up. Let's see if it will happen. Also, what might happen is that we are bouncing and dancing around the 200 EMA, which will probably continue in this manner. So we will probably just do this snake movement sideways and then go up and then go down and like this or up. This is the most likely scenario that I see. Okay, let's see. Maybe 1 hour. Okay, 15 minutes. Can we see something on the 15 minute? Yeah, on the 15 minute we see breaking of a tiny trend line. We could even expand it to here. Tiny trend line is breaking. But do I want to work with this? I'm not so sure. I'm not so sure. I would rather work with bigger trend lines. Maybe if we create something like this, if we I mean based on the 15 minute, if we go down like this, then retest it like this, and then break down, then I might short it. But as of now, not really. Could be an M. It might very much break down at this very moment. But okay, this is the small time scale. Yeah, it looks bearish again, very bearish, because it's rising and the RSI is going down. But like I said, with the RSI, can't use it safely. So let me see, do I do something right now about this situation, or I just go and have my breakfast? Now it bounces back. Yeah, I'm probably just gonna go down like this again and then go back up. I do not feel confidence that it will break down right now, because in order to break down, I love to see some bigger trend lines broken, like big touch points, like a big skewed M, like this, something like this. This for me looks more dumpy than just this. This might very well reverse and do something like this, you know. No? You understand? And then break down, because this would also create this this type of trend line. Or maybe just go slightly down like this and then go up again. You understand? So this is why if you short this right here, it might well reverse and go back up and retest, and you have all this stress. Maybe on 1 minute you can do it, but might be a little bit stressy. So this type of trend lines that get broken is a bit more reliable, you know, to short. So this is why I'm not really acting right now. Okay, I'm very tired. Let me look at $160 negative. Alright, I think let's call it a day for today. Maybe later I will open a new stream, but right now I need my coffee, my breakfast, and so on. See you very soon. Thanks for watching.